Hello and welcome to another edition of Investing for Generations. And like every Wednesday now, I want to analyze today's stock for you from my watch list, my number one on my watch list, and also want to give you a weekly update on my current portfolio. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. Today I want to talk about the first company on my watch list, and this is the absolutely giant Microsoft, which was founded in 1975 from these two very handsome men, Bill Gates and Paul Allen, which founded Microsoft in 1975 in Albuquerque. And I think you will know, it's an American multinational technology company, most famous for Windows or his office packages with Word or Excel or PowerPoint. So I think almost everybody who turned on a computer would know these software. Microsoft have around 150,000 employees right now and a yearly revenue of $138 billion dollars. And the brand is one of the most famous brands in the world and the most valuable brands in the world. It's number 3 on the Forbes list for the most valuable brands. Then dive deeper into the financial numbers of Microsoft. Microsoft pays a small dividend of a little bit less than 1%, but with a high growth rate of 10.45% over the last 5 years and a very small payout ratio of 35%. So I think even if the dividend yield is not very high over time, this is really a nice dividend stock. And even if Microsoft is so big and so long on the market, there is still a nice revenue growth. Over the last 5 years, the revenue grew 8%. And this revenue comes from some different sectors. Half of the revenue comes from the server products and the office products, and the rest of it is just over some other segments. So there is kind of a diversification. And it seems like this growth is not over yet. Per Yahoo Finance, in the next 5 years, they estimate a growth for the company of around 15%. And one of the main drivers for the growth of the revenue is the cloud business. Right now, Microsoft has just a market share in cloud business of 17.6% and is way behind Amazon, but they grew faster, incredible 62.3%. So it seems like there is a big market. I think this will be the next big thing for Microsoft. Microsoft works on high margins, but you can also see that there was some drops in the past, but every time when there was a drop, they found a way to come back. And it seems like now with a strong growth in the cloud business, they found another way to just grow and also work on high margins. And these margins now over 30%, and the net margin is really nice. And also the returns are high. The return on equity is almost 43%, as you can see here. And also the return on investment is at 28.8%, very high. And what's of course very important and very nice for a stockholder, the free cash flow is growing very fast. It's around 12% over the 5 years per year. And this is really a very nice picture and of course a dream for every stockholder. And also when we take a look at the balance sheet, we find one of the strongest balance sheets in the world with a debt equity ratio of only 0.61, a sky high current ratio of 2.9, and over 137 billion in cash. So this is almost the same amount Berkshire and Warren Buffett have right now and get a lot of criticism for it. Microsoft has almost the same cash. So we will see what can they do with it and how can they use it just to grow and make more money. But of course, with 137 billion in cash, you have opportunities. Then just take a look at the management. The current CEO of Microsoft is Satya Nadella, and he's in the company since 1992. And this is something I really like if somebody sticks so long in one company. And he was there in different positions, and since February 2014, he's the CEO of Microsoft. And just take a look what happened to the stock price of Microsoft, which is a very good indicator for the work of the CEO. And we can see since the CEO took over in 2014, the stock rises from $38 to currently $214. And this is just a gain of 463%. So it looks like the CEO does a really good job, at least for the stockholders. There's a lot of reasons to have faith in this management. But then take a look at the current price. As I said, the current price is $214. My calculated intrinsic value is $160. To find this intrinsic value, I use the 15% of growing rate, which is estimated by Yahoo Finance. And then you come to an intrinsic value of $160, which just means that Microsoft right now, at the all-time high also, is 33% overvalued. So there is no reason to buy in right now, even if we have a great business, as I tried to explain before. But of course, for a price so much over the intrinsic value, it just makes no sense. And with this chart, I just want to explain why it makes no sense to buy into a great company when it's overvalued. This is a chart of Microsoft from 1995 to 2018. We can see here that Microsoft was at a high at the end of 1999. And then the dot-com bubble burst and it just fell down and dropped a lot to around $20. And then it needed another 16 years or a little bit over 16 years just to go to the same price again. So, and even if Microsoft in this 16 years just made a great job and grew and earned a lot of money, people who bought Microsoft at the end of 1999 just came to a break even 16 years later. Unless the dividends, of course, but with a stock price. So, and this is a reason why we can't buy even great businesses and even maybe one of the greatest businesses around for a so overvalued price. This makes it so important to try to find an intrinsic value just to know when is the right time to buy in to get a good return. So what's my conclusion then? My conclusion is we have with Microsoft a great business, one of the greatest businesses around, with a super strong brand, number 3 in the world, still with a nice growing rate and in really incredible balance sheet, but it's just so much overvalued right now, and so there's no reason to buy in. With a so great company like Microsoft, I would be very happy to buy in around the intrinsic value. As you maybe already know, normally I just buy companies under the intrinsic value and way under the intrinsic value. So normally I buy my first positions at a price 20%, 30% under the intrinsic value. With Microsoft, I would take a first position at the intrinsic value. So we will see how this works out. Maybe we get another crash. Nobody knows. But of course, if there is a chance to get Microsoft on the intrinsic value, I will take this chance. So we will see what happens and if this chance ever comes. Then just take the weekly look into my portfolio. Here we can see all my positions right now, and we have the leader Chevron with almost 50% gain, and the biggest loser right now is Wells Fargo, and we will see how this will go in the future. I think next will be the dividend cut. Let's see what happened there. As you maybe know, for all these companies, you find specific analysis on my channel. So feel free just to watch the videos of every specific company, and you will find the reason why I bought in. And you also can see that the first dividends came in. And we also can see here how the dividends came in over the year. So I got almost $22 in March and $12.77 in April, and then a little bit more, or a little bit over $34 in May, and almost $127 in June. And for July already it's almost $40. And at all in 2020 I got already $235. And then also take a look at my performance. The current performance of the portfolio is 16.21%. As you maybe already know, this portfolio started at the 2nd of December, and the outperformance to the S&P 500 is a little bit over 14%, which is a good result for the short term. I'm quite happy with that. That's it for today. If you liked the video, subscribe, ring the notification bell to never miss another video, and give me a big thumbs up. So I'm very happy for every like and every subscriber, of course. Already we have 85, which is a big number for me. Just started the channel 6 weeks ago, so that's nice. It's just growing, and I'm so glad and happy for everybody who joins me on my way. Hope to see you the next time, then on Saturday again, with my series of the Robinhood Stock of the Week. See you then. Take care. Bye bye.